So, for those who don't know me, my name's Steve Maarbani. I am a corporate lawyer for my sins, and I was until recently a partner of another Big Four professional services firm, not this one. And in that practice, we specialised in funds management. So, my practice sets up private equity and venture capital funds, and then we work with those fund managers to deploy capital into whatever their investment thesis might be. In that role, I had the great privilege to lead the firm's venture capital thought leadership, and that means annually we would unpack trends in the venture capital market over the last 12 months globally and locally. We would look for emerging themes through those trends and attempt then to talk to the market about where and how they might optimise the opportunities that those themes presented. And even back then, even 12 months ago, 24 months ago, one of the key themes that was very, very high on my radar is real tech and the implications of technology on the real estate sector. So when Jonathan and Avi approached me 12 months ago or so and invited me to join the team at Real Tech Ventures, one, they were obviously preaching to the converted, but that's an opportunity that I jumped at immediately. And the reason I jumped at that opportunity immediately is because I genuinely believe that the new battleground in real estate is technology. So what I'm going to do briefly is, in a moment, I'm going to host the panel discussion and then we'll open up to Q&A. But before I do that, I want to pick up on something that Jonathan mentioned when he talked about the real estate sector historically being slower to innovate, but that had begun to change. And what I want to do before we begin the panel discussion, and in some ways to contextualise that discussion that we're about to have, is talk to you about two things. One is just how profound, from a financial perspective, that change in attitude has actually been. And then secondly, I want to pick up on one of the key drivers that we think is very subtle but very profound, that's going to continue to move that theme forward. So let's start with this. Since 2012, global capital allocations into direct real estate investment, so the acquisition of property, has doubled. It's risen from 166 billion US to 320 billion US in 2016. So it's doubled over 4 years. But over the same period, venture capital funding into real tech companies has increased from 221 million to just over $2.6 billion. That is a 1,200% increase over the same period over the last 4 years. 12 times growth in 4 years' time. Now, I accept that we're starting from a low base in 2012 comparatively. But if you're a board member of a traditional real estate organisation and you're looking at this exponential rate of growth in the amount of funding that's going into technology companies that are designed to either add value or disrupt traditional real estate sector business models, then I don't think that exponential rate of growth can be ignored. Now, with the long-term outlook for direct real estate investment remaining relatively positive, our view is that venture capital allocations into real tech is going to continue to exponentially increase. If that's right, and venture capital allocations to real tech continue at the rate that they have, which you can see on the screen over the last 4 years, our expectation is that by 2020, it will hit something like $20 billion US, which, as Jonathan pointed out, is about the same amount of money that's currently being invested in fintech. Now, the fintech experts in the room will know that number is beginning to level out. Our view is that the real tech investment won't just hit the same level as fintech investment over the next 3 years or so, but will continue to exceed that $20 billion threshold. The reason we believe that is because the built environment touches on every aspect of our lives. It touches on the way we work, the way we live, the way we play. It touches on $217 trillion worth of global real estate assets. And on that basis, real tech has the potential to significantly greater scale and impact than many of the sort of disruptive themes that run through a number of other sectors. And we're not alone in this view either. So over the last 3 years or so, we have seen the number of unique, active, real estate-focused investors globally increase quietly year on year. And in 2016, CB Insights recorded 243 new active, real estate focused investors globally. And they're not just who you'd expect, right? They're not wacky super angels and quirky VC funds that sit in Silicon Valley and are obsessed with their own investment thesis. It actually includes some really traditional, large, corporate, incumbent real estate organisations. Jonathan talked about some of those, but we'll unpack those in a minute as well. So, what is driving that growth? Steve mentioned in his opening that we're releasing a white paper today, and you'll get copies of that in the next couple of days. In that document, there's a section that unpacks what we think are the key drivers of the growth of real tech globally. And they include things like urbanisation, increases in the penetration rates of mobile technology, the impact that millennials have as they enter the workforce and move into more senior management roles, how that will affect the creation and adoption of tech in real estate. But leaving the macroeconomic drivers aside for a minute, the one that I just want to focus on before I wrap up is this. It's a driver that I think is really subtle, really easy to miss, but ultimately probably the most profound of all. And that is the heightened consumer expectations on real estate that consumers have now as a result of the material innovation that's happening in other sectors. So what do I mean by that? We have all observed and been part of fundamental reinvention of a number of different industries that impact our daily lives. Entertainment, travel, transport, media, and I mentioned financial services. We've seen it, we've lived through it. We probably now take all of that for granted. I'm sure we do. The pace of innovation in those other industries and the resulting ubiquity of technology that we use for everything from finding a job to getting a loan to comparing insurance policies and buying a pizza, that ubiquity has heightened our expectations as consumers of every other transaction in our lives. And in particular, it's heightened our expectations of the way in which we engage with the built environment, the way we experience real estate and real estate transactions. This table gives you a couple of those examples. And so if you were hoping as a board member to keep your head in the sand and pretend it wasn't happening, you can blame all these guys. Social media platforms have empowered consumers now to access their peer groups, to make trusted buying decisions and to become publishers in their own right. And I think if you speak to the journalists at Fairfax today, they'll tell you about the implications that that's had on their business. The likes of Uber has empowered consumers with a global fleet of cars that they can use at any time to deliver pretty much anything from this little thing in my pyjamas from my lounge room if I want. Right? Spotify, Netflix, those types of companies in the entertainment space have empowered consumers with access to video, music, television, film libraries that are unlike anything we've had access to before. You can access it on demand, cost effectively, extremely efficiently, and fintech startups have empowered consumers to be able to search, to compare, to acquire, to transact, everything from home loans to insurance policies. Now, if you're sitting in the room going, yeah, we know all that, in some ways you're proving my point, right? It's just become part of the way we live. We expect that we can do all those things now. And in the wake of that innovation in other sectors, consumer expectations of the real estate sector, real estate transactions, the built environment experience has been elevated. And as innovation in those other industries continues to power ahead, consumer expectations of what they get from real estate will put pressure on boards to continue to move ahead. But see, therein lies the opportunity. So it's not about bricks and mortar, it's about the customer experience, and technology is the key.